Hi, I'm Tom Graffeo with Dove Investment Research and Management, and I want to take a few minutes to talk about what's been happening in the financial markets, and lots has happened in the last 72 hours that you need to be aware of. So please hang on. We'll cover this quickly, but always know you can give us a call in the office at 877-436-8346 and go over anything you have questions on and help you personally. Okay? Know that from the outset, but here's what's been going on. On Friday, the regulators took over a bank called Silicon Valley Internet Bank, SVIB. On Friday, they announced that all depositors were only going to be insured up to $250,000. There was a lot of problems with that. That is a traditional FDIC insurance level. And that also then applied to another bank called Silvergate that was also taken over. And then a third bank called Signature Bank was taken over on Sunday, yesterday. All these banks had the same problem. They owned a lot of treasury bonds and a lot of bonds that were issued by the United States Treasury. Now, quick lesson. If you buy a bond for $1 million, it's a 5-year out term, 5 years in duration, 5 years in the future, and it's 2 years later, but interest rates have risen, that bond you spend $1 million on is now maybe worth about $800,000. So it'll be worth $1 million guaranteed in the remaining 3 years, but in the meantime, it's only worth $800,000. Well, that changes the balance sheet of the companies, of the banks that own it. So the balance sheets has been the problem for all these banks. And so all of a sudden they're like, well, we have the assets, we have the capital requirements, but we just need time to roll forward. Well, no one lent them the money or gapped it in between. So now all these banks have had a problem, and more banks potentially could have had a problem, right? So what happened is that over the weekend, and I just heard this earlier, that there's actually at 2 a.m. this morning, there was a 2 a.m. Monday morning, Sunday night, Monday morning, 2 a.m., Congress had an all hands meeting at 2 a.m. with the Treasury Department, 15 minutes notice, and they went out and they basically talked about policy and they came up with the idea. So the problem is I was at church talking to people who were asking me the financial questions, and I said, this is like a sinkhole developing, right? It could sink everyone in. I used two metaphors, probably mixing my metaphors a little bit, but it was the first one, a sinkhole being created by these banks starting to come down because, as my son pointed out, he went on Reddit, looked at different things. When the Silicon Valley Internet Bank went down on Friday, lots of people posted on Reddit, a public forum, that said, my company is now out of business because our payroll was there, and it was clearly beyond $250,000. My company's out of business because our bank held all of our business's money. Well, that was going to affect not only probably many tens of thousands of people, but it was also going to affect certainly 10,000 or more companies. So massive layoffs, massive tech problems in the technology world. Also, on top of that, you had Silvergate was a huge owner of and depositor with crypto. So again, the sinkhole, it was going to expand into crypto, right? And it was going to create a problem for crypto. It was going to create a problem across the board. So Congress decided to jump in and change the nature of the FDIC. And that was, I think, kind of a unanimous decision, probably, when you consider that it wasn't that much money that was needed. This morning it was announced, and they're all trying to position, this is not a taxpayer thing. We're charging other banks to pay for this problem. Okay, but the bottom line is that they wanted to secure the banks, stop any potential run on small regional banks, and help businesses survive this. I am not a big fan of a lot of policies out of Washington. Particularly this administration. This has, and let me say this, I've heard since then all sorts of pundits trying to blame this on Trump and things that Trump did. This has nothing to do with Trump. The banks had the required minimums. The banks had all the stuff that it looks like. The balance sheets were where the regulators said it's a value that because Jay Powell raised interest rates so fast, it hurt the balance sheets, and that's something that was kind of one of those kind of unthought of or unknown consequences. This is a mostly good policy that has happened, that they have jumped in to save all this. It adds stability, it keeps the economy going, and it stops bank runs, or should stop the bank runs. It's early to know, but it should stop the bank runs, and it will not cost taxpayer any money. So I'm in favor of this, actually, for a lot of reasons. It does, however, change the nature of the FDIC, and it does leave a lot of open questions, which will be debated going forward. right? I have notes, so pardon me while I reference my notes, but it does pick winners and losers, right? The finance industry is going to be a winner in this whole thing, right? Because the finance industry says banks are not going to be able to fail, or banks can fail, but depositors are not going to fail, right? What does it do to the 250? Is the 250 now officially gone everywhere? $250,000 in deposit everywhere? Can everyone else be a loser now if you're not in finance, right? If you're not in the financial industry, and are all bank assets now unlimited deposits? So, the other thing to kind of, this is me just being a little bit thoughtful about this whole thing. I'm not privy to any inside information, but it is interesting that this policy came out of the Silicon Valley collapse. That area is actually covered by Congresswoman Nancy Pelosi. That's her home territory. That's where all the money that she's collected for all these years and paid out to other Democratic support systems is all basically there. But that's another story for another thing. That's a political problem. But ultimately, the end game is right now that things are much more safe. There was a potential for a run. It has stopped at this point, and the government is very aware of this, and they are on top of this. And I think that this is a good policy as of this point. If you have any questions how it affects you, your policies, your investments, anything like that, please give us a call. Again, Tom Graffeo, Dove Investment Research and Management, 877-436-8346. I love you all. God bless you. And I'm here to help any way I can. Thank you.